Thank you all for joining me this afternoon. Good afternoon. I am excited to have each and every one of you both join, whether you are watching a recording of the presentation or you're with me here live. I am appreciative of your time, and I'm excited to get to work with you here for the next hour and counting. I'm going to go ahead and share my screen, and we will go get started. I'll start presentation here. Wonderful. Well, thank you all again for joining. I am so excited to have you this afternoon as we are getting 2024 kicked off. And I don't know if you guys have heard or not, but we are having a general election this year. So this is a big impetus here for TradeWinds looking to do and continue our webinar series. So I appreciate you joining me here for this afternoon as we dive into election anticipation, preparing your investments and maybe more importantly, yourself for November. For those of you who don't know me, my name is Miller Hoffman. I lead our client experience team here at TradeWinds. TradeWinds is a registered investment advisor in Raleigh, North Carolina, where we look to specialize in really two main parts of the financial world. That's financial planning, so working on tax strategy, saving strategy, looking into managing your debt, budgeting, also looking into things like estate and retirement planning, along with investment management. So, how are you invested? What do your goals look like? How much risk are we okay with? Along with really diving in to your comfort level and finding that peace of mind that at times can be pretty elusive. So excited to get to work with you. If you're familiar with us, welcome back. And if you're new to TradeWinds, I have my contact information in the bottom left-hand corner. I am always open for any questions or comments that you may have. But I owe everyone in the audience here, whether you're with us live or a recording, a big thank you. You are demonstrating a willingness to learn more and to talk about two emotionally charged topics for the hour that we have today. That is obviously politics and the election, but also money, the impact on the markets. Throw those two things together, and it's a one-two punch when we look at topics that dictate behavior for a lot of people and invokes a certain reaction in how we feel and our overall comfort level and well-being. So I appreciate you putting yourself out there and talking through topics or willing to listen about topics that we are certainly passionate about here on the TradeWind side. But the willingness to learn more is really powerful. We live in a day and age where information is abundant and it's constantly being thrown at you. It seems like wisdom is getting more and more scarce and hard to find. So I'm hoping we'll spend more of our time this afternoon on the latter in terms of sharing wisdom with you. So I have to start with a general disclaimer here. We are talking through a sensitive topic. I'm going to go ahead and let you know if you are looking for myself or TradeWinds to endorse a particular candidate or particular policy, I'm going to go ahead and disappoint you. That is not what you're going to get out of this presentation. What you will get out of the presentation is me offering facts, figures, statistics, along with tying that into some larger big ideas that may have an impact on maybe not at the ballot box, but maybe how you perceive things and news that constantly happens here in the economy. So generalizations will be made in an effort to move the conversation forward. We're dealing with a intimately human topic, so there are always exceptions, but one of the larger generalizations I'll make is that it will come down to Donald Trump representing the Republican Party, along with Joe Biden representing the Democratic Party. So we will talk through a couple of the third candidate options here moving forward. But that's one of the first and foremost generalizations that I will throw your way. Depending on our time, I'd love to answer questions. There's a chat box here you should be able to access and throw questions my way, but excited to talk through topics, whether it be now or later. Um, so let's go ahead and get started. As we set our agenda and I set expectations for what the next hour or so will look like, I want to make sure I'm very clear in what I'm looking to bring to the table, along with the duty that I owe you, the audience. So during our time together, I'm aiming to offer objective information, or as close to objective as I can get, that's designed to stimulate your thinking. Again, we're talking through some pretty intense and heavy topics. I'm here to offer information and allow you to be open-minded as you receive new information. You are always allowed to change your mind or consider other opinions or ways of thinking, and that's what I'm ultimately looking to challenge you to do. I'm looking to find a nice balance today between offering some of the big ideas along with getting in the weeds on a couple topics. But there have been documentaries, books, TV shows, movies about just some of the small ideas we'll talk through today. So, at risk of you falling asleep on me, I'm looking to find a good balance between offering the big ideas while still offering some need and statistics that you may find important. Um, the data that we'll be working through today is not my data or even TradeWinds information. Um, I looked at a pool of different independent research, and I've gathered that all here together, along with giving you what our opinion and perspective looks like on the TradeWinds side. So we live in a day and time of fake news, false equivalencies, and alternative facts. For today's purpose, I want to make sure we're building on research and facts that we can trust, that we have a high degree of certainty that they are indeed reputable. And more. I'm excited to dive into some of the topics we'll work together on today. But by the end of the webinar, I'm hoping you'll walk away with having a bit better understanding of how do capital markets, like the stock market, interact with U.S. elections. We know the elections are coming. They happen every 2, 4, 6, and so on years. How do markets anticipate, and how do they react during some of the larger election years, like 2024, for example? We're going to zoom out and take a look at the economy as a whole. Why is it important to voters? But why is it important for the candidates? So vying for seats, whether it be in the White House or branches of Congress here too. We'll do a bit deeper dive into some of the important pieces of legislation, specifically the tax law that's coming up here before you know it, in terms of changes, or depending on which candidate wins here in November, we could anticipate seeing some pretty notable changes here. Along with this idea of feeling more comfortable as we enter a junky and at times exhausting election cycle. The signs are going to come out, the ads, the commercials, everything. Your attention is constantly going to be fought over, which can be stressful and exhausting. So I'm aiming for you to feel more comfortable and achieve a certain peace of mind as we go into an uncertain year, being an election year as a whole. So without further ado, maybe let's get started. Overall, I'm challenging you to think of the way that you perceive information. Right? As humans, we naturally have a bias to looking to confirm what we think to be true and disregard things that maybe doesn't line up very closely with our agenda. We call that confirmation bias. I'm hoping the presentation today, no matter which side of the aisle you may sit on or prefer, is going to challenge you to think a bit in a bit different way. Let's continue moving forward and making good time here. So what's the big deal? Let's start at a really high level. I think that sets the scene well for what it looks like here in the United States. I'm willing to bet if you are actively here in the audience, whether it be, again, recording or live, you have heard the phrase, "This is the most important election in history" before. Now, typically that phrase is followed up by, "And here's why you should vote for my ideal candidate," or support my particular policy that I'm fond of. At risk of being hypocritical here, I am here to tell you this is the most important election in history if we look at two pretty narrow perspectives. And that's demonstrated by the chart that you'll see here on the right-hand side. If we look at the world GDP being gross domestic product, or the entire output of a particular country, so things like spending, consumer investment, government spending, imports, outports, those kinds of things, entire country, what are they producing, along with population, how many people are able to vote and are active in the voting process. We are seeing, as you'll see the highlighted bar here on the right-hand side, We are expecting for this year, 2024, to be the most important election in history if we just strictly look at those two perspectives. So we are seeing a large chunk of the world population being active in the voting process. So the United States is far from the only country here to have an election this year. We see several elections here in Europe, along with the UK. Mexico has an election, Taiwan. We've seen some of the South American countries recently have elections, like Argentina, for example. So we are expecting to see more and more people become active in the voting process, along with the dollar following those votes. So we're seeing the world or percentage of the world GDP correspond pretty closely with how many active voters there are here in the world. What does this mean for you and markets, though? Expected turnout in terms of more and more people getting active may add to more of the anxiety around outcome. More and more people are invited to the party. That may change the outcome of the general party here, being just voting as a whole. We're seeing our elections being more and more correlated globally, too. Gone are the days of the US election is completely independent from anything else going on in the world. That's not new news. But what may be new news, as we take a look at the graph here on the left-hand side, is how closely correlated we're seeing particular markets here with the United States and our election procedures here. Take Mexico here, for example. This chart is just looking mainly towards the middle of or early 2022, all the way until the ending of the year in 2023. Look how closely correlated both the red and the blue line are. Red line predicting a Democratic president winning, so Joe Biden here in this case, where the blue line is more representative of the Mexican markets. So it's attempting to track how healthy the Mexican market is. And we see both of those lines here compared together. There's a pretty strong correlation, giving the Democrats here, at least towards the end of 2023, a slight favorite in terms of who's going to take the White House later on this year. The right-hand chart is a similar idea, except with the Republican side. This is looking at the Indian markets. Look how closely these are correlated too. Now, it's not a perfect correlation, but it's relatively close. Right? The increases are pretty closely followed, along with the decreases. What does this mean here for you, and what does this have to do with the United States election? We're seeing more and more correlation with how different countries and their countries' respective economies are influenced by the American elections. It may be a good thing here for us here in the United States. We're still able to act as a clear superpower, but we have to be cognizant of some of the other countries that are growing very quickly and are commanding a pretty large chunk of the world GDP as it sets right now. We're having more and more people expected, really than ever, to get more involved in the voting process, and naturally they are bringing their dollars alongside with them. I think some people may see this as a source of excitement, right? More people are getting involved, democracy or similar styles of government are being spread across the world. That can be a good thing here in terms of fairness, but it can also add some uncertainty there. More and more people getting involved, again, may have a strong influence on what the outcomes could look like. If we take a deeper dive here into the US, it is so important that we understand how close these elections are. Despite what the media may tell you, this concept of a blue wave coming and all houses of government are all going to be a certain color, or vice versa. The Republicans are going to win the houses of Congress and the White House. Figures and recent history and overall long-term history would suggest a much different story. Take a look just at 2016 and 2020, for instance. Comparing and contrasting both figures here. So both looking at the actual number of votes, so more representative of the popular vote, along with some of the key battleground states. It's more representative of the electoral college, right? So remember, The system we have in the United States is really based by states and districts, not so much by popular vote. Remember, Donald Trump actually lost the popular vote in 2016, but ended up obviously winning the presidency. Um, Take a quick moment to sit back and realize how close these figures are. The United States is as close to a 50-50 country as we could really get. We're talking about less people showing up to your average college football game on a Saturday as having a large influence on how the overall elections actually turn out. This is a tiny percentage of roughly the 160 million people who voted in 2020. Less than 70,000 of them actually could be attributed to making the difference in some of these key battleground states. Now, I don't know how closely you track politics and the news, but we are still talking about a handful of these states. Georgia is still in the news, and Arizona hung around there for quite some time shortly after the 2020 election. This is not only important for voters to know, but you better believe candidates know how important some of these key states can be. If you're coming into this presentation here thinking your side is going to win by a large swing of percentage points, I'm here to tell you history would offer a different conclusion. Now, anything can happen, and we are certainly in a volatile period in the election process. However, even with everything going on, polling is still as close to 50-50, even a result of some more of the left-leaning and right-wing polls are still very close between Trump and Biden. It's almost uncanny how close things are at this point. Which leads me to the second point here. The impact of a third-party candidacy could be important for us in 2024. So RFK and some of the other folks still in the hunt are vying for the opportunity to make it on the debate stage. If we assume that 2024 may be as close, or at least within the ballpark of being as close as this is, just a tiny share of some of those overall votes could really have an effect longer term on who eventually wins in November. Right now, we're seeing polls being more detrimental for Biden with the introductory of a third party. So RFK in particular is taking more and more market share from Biden than he is from Trump's voter base. Trump has really kept a lot of his folks that follow him in 2016 and 2020. We're seeing Biden voters and more people in the Democrat Party be a little bit more fickle in where their allegiance may lie. So we are shaping up for still a very close election in 2024. And I think setting that expectation of this could come down to a handful of states is the main point of the slide here. Now, before you have a heart attack and you see the subpoint here on star 3, a bit of trivia here for you, but it has a small likelihood of happening. In the event a candidate does not hit the magic number 270 of the Electoral College, the candidate must reach 270 in order to win the general election. In the event a candidate, so Biden or Trump here, does not reach 270, the vote actually goes to the House of Representatives, where each state gets one vote. And guess who is slated to win the House of Representatives for 2024? It's the Republicans. On the flip side, the Senate would then vote for the vice president. Guess who is slated to win the Senate as of so far right now in 2024? The Democrats. Could we envision a President Trump or a Vice President Harris situation? It's possible, but it's not very likely at all. This is more of a trivia tidbit for you, but we could see this have a big effect on who ultimately wins in November and really what the presidency could look like over the next 4 or so years. Why does it matter that these elections are so close? The last point is pulling it all back together, and one of the main reasons I'm assuming you are attending this afternoon. The impact that this has on the markets is tremendous. We tend to see election years as being more likely to experience volatility. Volatility tends to have a negative connotation when we think about it from an investor perspective. Think about volatility as the degree that that pendulum swings back and forth, both in a good way, but to be fair, also in a not so good way. So volatility or risk is a way that we assess and the overall market assesses a degree of uncertainty. Um, the markets are constantly trying to price in current information and see what impact that would have in the future. And surprise, the presidential election does cause the market to try to guess who was going to win and what could that presidency look like. But close is the norm, ladies and gentlemen. It is not planned or it is not likely for one candidate to win handedly over the other, whether we look at a popular vote model or the electoral college. Um, and it really boils down to policy, not politics. Certainly, different candidates are running on certain tickets or representing certain party lines. We see that as having more of an effect, and we'll dive into it here in more detail rather than which color occupies the White House. Is it red or would it be blue? Or perhaps in the future, maybe another style color here too. Um, so expect it to be very close and expect the market to be jittery as a result. This isn't just for 2024. We could really see this impact and effect really in every 4-year period in modern history. Um, However, overall, if we zoom out and think of just the economy as a whole, here's why it is such an important factor. So we just explored on the last slide how close things can be. Here's a reason of why things can be as close as they have been in the future and what we could reasonably expect in 2024. Your eyes naturally dart to the chart on the right-hand side, the red and the green. It's not Christmas yet, though. Still have a few more months to wait before a lot more red and green come out. But the chart is pretty self-explanatory. Presidents and presidential candidates who avoid a recession in the last 2 years of their presidency do incredibly well when it comes to their likelihood of being reelected. Those presidents who do not fare so well, so indicated here by the right-hand side, who do experience a recession, it hurts them. We tend to associate economic output as being credited with a particular president. How many times have we heard Clinton's economy or Trump's economy, Biden's economy? We tend to associate a president with a certain degree of economic prowess, like they know exactly what they're doing and they're able to help stimulate the economy. So if you think the economy just matters to voters and not necessarily for candidates, I'm here to tell you to rethink maybe your thoughts on that factor. From a simplistic point of view, but I think a true point of view, the economy matters because it really touches everyone, whether you're employed or retired, whether you're young, old, whether you're withdrawing from that nest egg or whether you're still in the process of building it. The health of the economy has a clear influence on what your sentiment looks like as a human first, and then, of course, as an investor second. So each candidate, both Trump and Biden, the economy clearly is high on their list and high for good reason. They're not necessarily doing it out of the goodness of their hearts. They are doing it because each candidate knows the importance of avoiding a recession towards the latter end of their presidencies. So what's a recession? If you were to ask me a handful of years ago, I would have provided the textbook definition. If we see 2 consecutive quarters of GDP here in the United States shrinking, so in other words, we're not showing levels of growth, we're really starting to show some contractions or things starting to shrink. But that definition has been under fire here, similar to some of the false equivalencies or alternative facts, those kinds of things. So technically, what the textbook would tell us is we have not experienced a recession under Joe Biden as of April 17th of 2024. The perspective I think is valuable for us to entertain, though, is did it feel like we experienced a recession, either in 2022 or into 2023? If I think about how Main Street felt, along with Wall Street, especially in 2022 and especially early 2023, we went through periods of some higher gas prices. Unemployment was still really strong, but the job market felt still really tight. Interest rates were going up through the roof at a rate that we've really never seen. So things like purchasing homes or borrowing, that part really started to draw up quite a bit more. So although on paper we did not experience a recession, if we look at investor sentiment and consumer sentiment, how is the average person feeling about how the economy is? Or do we have a lot to look forward to? Or do we have a lot to watch out for? I think what the numbers and statistics would indicate is the average person is still pretty nervous right now. Sentiment is historically low. And we've seen that bounce back and forth, really in the Trump presidency and Biden presidency, to be fair. Now, how is Biden going to approach this? What's in his toolbox, and how is he going to elude a recession over the next handful of months before the election season really gets ramped up and started? We would certainly expect to see more borrowing. This is something that's not special here for Biden's presidency. We've really seen a handful of the previous presidents do this. Liquidity in the economy is something that stimulates growth and allows for businesses to transact easier. Expected rate cuts. We will see. Joe Biden is not a member of the Federal Reserve, but for better or for worse, he will be credited for how interest rates have increased or when they will decrease. So again, we tend to associate presidents with how well or how poorly the economy did, and that's really how we determine if they had a good presidency or left much to be desired. I think we'll also see the Biden administration be pretty hands-on with their involvement in oil prices. If you're like me, you've seen gas prices tick up here as of late. And this is something that has, again, similar to the economy, a direct impact on how people are feeling, along with the markets at large. So for a president that certainly is on the docket here wise or platform is to be as green and eco-friendly as possible. You can bet it that Biden's still going to be very sensitive to where we are from oil supply, oil price, and how we work with other countries on what that looks like too. And lastly, the student loan programs, forgiveness, abatement, or something maybe a mix of the two is still pretty important to the Biden administration. So I think we'll continue to see ways for him to avoid taking it to the Supreme Court or other places that could tell him no, and more routes that he could actually get this done and show more relief, especially to people with student loans. Now we can argue about the efficacy or if that's should be done or should not be done. I'm simply stating this is a part of his toolbox and one of these ways that he's intending to stay in the green and try to avoid the red. So a quick recap. I mean, we associate presidents with certain economic policies, good economy, good president, not so good economy, not so good president. And we are quick as a country to unelect, or in other words, not reelect these people. But you will see a pretty strong likelihood if Biden is able to avoid a recession, a strong likelihood of continuing his presidency into a second term. We'll keep a close eye here at TradeWinds on what consumer sentiment looks like. How is Main Street feeling versus how is Wall Street trying to price these kinds of things in? Let's continue to move right along. Let's shift into some more legislation that's on the docket here for us. And this isn't something we can talk about, but may happen. Of course, there are elements to that, but we have a track record of what has happened both in a Trump presidency and what the Biden administration aims to do. As a part of the the Tax Cuts and Jobs Act that was passed in late 2017 and really went into effect in 2018, part of the reason it was passed really in the first place is that it was temporary by nature. So we are getting right to the point where the Trump tax plan, as the way a lot of people describe it, is set to expire by 2025. That is right around the corner, ladies and gentlemen. So we could expect to see, no matter who gets elected in November, we could see a continuation of what we've really been experiencing over the last 6-7 years or so, or we could see it revert to the rules that we had in place before the Tax Cuts and Jobs Act. I think it does really depend on who wins the seat here in November. I think, as you'll see, a couple of the headlines I just pulled, and relatively recently too. If I just Googled Tax Cuts and Jobs Act, you can see what two options were towards the top of the list. I think the Republican side of the world are anticipating massive tax increases. I think that may be um, certainly expected on their end. It's certainly something Trump is going to campaign on, as the economy and his influence on the markets is definitely something he takes pride in. But you'll see, for every person who feels strongly, there's someone who equally feels as strongly on the other side. So other people seeing this more as a chance to get back to a more normal tax picture that we were getting used to before 2018. Wanted to take a second though and do some myth busting, or at least set your expectations for what both candidates may choose to talk quite a bit about during debates or just along the campaign trail. If you consult the graphic here on the right hand side, this left hand chunk is the prior law, so what was in place before 2018, and you got it. The right hand side is the Tax Cuts and Jobs Act. I've put some dots here that are different colors to guide your learning and review. We are not going to go line by line here. I wouldn't bore you in that way, but I am here to say, objectively, the Tax Cuts and Jobs Act reduced the tax rate on the ordinary income tax schedules. You will hear an intense debate around whether the tax cuts were actually what they were made out to be, or maybe who received most of the positivity from the tax cuts themselves. No matter which income bracket you are, in the Tax Cuts and Jobs Act, you experienced a more favorable tax nature on paper. Now, whether or not it feels that way, or whether or not you actually saw a reduction in tax or an increase in tax, is personalized here to you. But these tax brackets do not lie. If you look and correspond along the rows here, you will see tax rates on the right-hand side are lower than the left-hand side, but they aren't just lower. The thresholds in which income is taxed is also a bit wider. So those are really designated by the green dots that I put on the page. Now, I'm not here to tell you whether the Tax Cuts and Jobs Act is the best piece of legislation that we've ever seen, or that it's the worst thing in the world, but I am here in the essence of trying to set your expectations, as both candidates are certainly going to talk about the tax environment in this country. I want you armed with seeing exactly what the tax rates are. This is not an opinion. This is as close to objective fact as we can get. What topic may be more debatable, but the numbers maybe still support strongly, the tax nature is more simplified right now than what we've seen in years past. In 2017, before the Tax Cuts and Jobs Act was passed, we saw about 70% of Americans use the standard deduction when they went to file taxes. This is the portion that virtually every American has access to. It's kind of like your Monopoly. You get $200 every time you pass go. It's afforded to you. You don't really have to do anything or qualify for it. Depending on what kind of taxpayer you are, dictates how much of a standard deduction you may be entitled to. The idea of the standard deduction is to simplify, so you're not carrying around a shoebox full of receipts year after year after year, like those of you on the presentation here that itemize. So we saw a pretty drastic increase from those who standardized before the Tax Cuts and Jobs Act to now, or in 2020, upwards of 90% of taxpayers are using the standard deduction. I think the idea that the Republican Party would push for is we're for simplifying the tax code. And although it's not as small as putting it on an index card, I believe as Trump once alluded to, the numbers, or at least percentages of people who are standardizing, suggest that the tax filing process is more simple than maybe it's been in years past. Something that's important to you as an investor on the call, whether you have quite a bit in savings or you are just getting started, are capital gains taxes. Capital gains are wildly different than the graphic here on the right-hand side. They tend to be taxed at a much more favorable rate or a smaller rate, and it's only based on actions that you make in the investment account. We call that realizing certain amounts of capital gains or how much your investment has increased over time. Something that has come up on the left side of the aisle or in the Democratic space is a way to tax your wealth or taxing unrealized gains. Um, ways to finance certain government programs or trying to offset the deficit or debt that we currently see click up and get higher and higher each day. So I think we'll see capital gains come under fire once again this year, whether it be, especially if it's a Biden win here as the incumbent. I think we'll start to see those mumblings and rumblings come to fruition, along with seeing what a shift to ordinary income treatment looks like. What I mean by ordinary income is more of this chart here on the right-hand side. So not having a special tax setup or tax treatment for your investment portfolio, but rather it all being treated as just ordinary income in concert with some of these rates that you'll see on the right-hand side. So both from an investor point of view, but also for those of you who are still working or even earning pensions, or annuities, even Social Security, mainly is it really falls to these tax rates on the right-hand side versus what your investment portfolio is doing. And last but not least, we expect the estate tax realm to change quite a bit. The numbers here, so a little over 11, 12 million right now is the current exclusion amount. At risk of boring you here, the exclusion amount is a large amount, and unless your estate is worth more, then right now it's around the 12 or 13 million dollar amount. It's been increased with inflation a bit. You don't have to worry about paying estate taxes. We are expecting that to roughly half if the Tax Cuts and Jobs Act does end up expiring or sunsetting to around 6 million or so. It may be a little higher depending on what Congress and the tax code wants to do with inflation wise, but estate would include not just your investment portfolio, but things like a home, a business interest, other forms of real estate, other property that you may own, bank accounts, that kind of deal. So although 6 million and certainly 12 or 13 million sound like really high numbers, and certainly they are, consider what the thresholds were 20 years ago. In 2004, these numbers were just 1.5 million. 1.5 million is much more likely to be hit by the average American family, certainly, than 12 or 13 million. So we can see Congress really play with these amounts. And if we expect a Biden presidency to renew, let's say, we could expect these estate taxes to drop pretty considerably. Let's continue moving forward. I certainly wanted to make sure we spend some time on markets. I think that's a main driving force, impetus of why you joined the call today. What does TradeWinds think? How are markets going to shape out for this year and moving forward? Although we've misplaced our crystal ball here at TradeWinds, we are still actively looking for it. But until we do, something that we rely on is historical behavior and what has occurred really in recorded history. So take a look at the graph here on the right-hand side. We are on a winning streak here for 13 straight years. If we look at the American stock market represented by the S&P 500, so think of the largest 500 or so American companies, and we track their performance. In the past 13 years, when we've gone through a re-election year with an incumbent president, so like a year just like 2024, we've seen the average returns be pretty strong. This is well above average for what we could expect year after year after year, along with a pretty strong track record. So 13 years over roughly the last 70, 80 or so odd years, we've experienced positive years, and not just positive, but above average performance years. So past performance isn't necessarily indicative of what could occur in the future, but I think history does allow us to better understand where we are in history. And although it may not repeat itself, history tends to rhyme from time to time. So we think history bodes pretty well for elections that are similar to 2024. Um, Whichever president wins in November is instantly a lame duck. That's something pretty rare that we have occur this year. We haven't had a matchup of two candidates in 68 years. We haven't had a rematch of two sitting presidents in over 130 years. So this is a pretty special year based on what the history that each candidates are bringing to the table. But whoever wins in 2024 is instantly a lame duck. They won't be able to run for the general office here ever again. What could the impact be on their presidency as a result? Are they going to be more focused on the economy or maybe not? As we've seen some of the previous slides, being the economy as a main driver of reelection. Overall, at this point, 13 years and counting, we will see if we continue that trend in 2024. I think the main risk comes from a positive year. Our positive years are not all created equal, right? A positive year could be upwards of 30%. It could also be single digits, 5, 6, 7%. That's where the risk comes from. We have really no idea if it's going to be 30% year. I don't know if anyone saw 25 plus percent occurring in 2023 for the S&P 500. So really a lot of question marks still around what 2024 could look like, but history is a nice aspect to consider when taking a look back to see similar occurrences. And then, of course, look at the left-hand graphic by fidelity. I thought this was really, really neat because I hear this very frequently. Trump is going to be very good for financials, or Biden's going to be great for healthcare. I love his healthcare plans. What the history would show us over the last 50 or so odd years is there is not a clear rhyme or reason behind which candidate and their impact on some of the more notable sectors here, specifically in the United States. So the dotted line here is formatting the general, or illustrating rather, the general American market. So the S&P 500, which sectors outperformed the general market and those that underperformed. I imagine if you click back in your mind around certain election years specifically, we may have to bite our tongues here a bit on financials. Being a Joe Biden presidency, they're underperforming, or those that outperform. Things like healthcare, technology has certainly been an active sector for the past few decades and counting. The most important aspect of this graph that I want to share with you is there does not appear to be any clear correlation or reliable prediction on if a Democrat or Republican and the impact that they have on a particular sector. So be very careful about the news media, neighbors, friends, family, who say if Trump wins, I'm going to buy X, or if Biden wins, I'm going to sell out of Y. That can be really dangerous when we look at a particular party and a particular sector. And history would demonstrate that pretty clearly. Now, anything can happen, certainly, but no rhyme or reason here tells us to maintain diversification and some of the investment principles that make you successful with a high degree of certainty over certainly a longer period of time. Let's call to action here. So what's the point? What are we taking from the presentation, and what kind of wisdom would I look to impart on you as a human first, filled with emotions and opinions and biases, but also as an investor who clearly has certain things that you may be looking for, or maybe certain sources of anxiety. I think having a plan and sticking to it is one of the biggest differences between people who are successful financially and those who haven't quite yet figured it out. So answering the questions, thinking long term, where do I want to be in X amount of time? We know elections, that bus drops people off every 2, 4, 6 years. We know they're coming. What impact should that have on you thinking longer term for your financial picture? For my retirees that are watching, when I say longer term, I don't necessarily mean 40 plus years. What I do mean is thinking years or 3, 5, 10 years at a time, instead of just week by week, quarter by quarter, or even individual year by individual year. Asking yourself what keeps you on track when you think of your own financial picture. How does the economy and the different business cycles affect you, your employment, your ability to make money, your ability to save and invest money, along with what could derail you? What topics or concepts out there could really provide some stress in your overall financial picture? Think of the things that you can control: savings rates, how much we're spending, how do we have our investments positioned. Those are things that are within our sphere of influence. Things that we cannot control, I can't control it, TradeWinds can't control it, and neither can you, are things like inflation, interest rates, and even presidents. Unless you have the ability to single-handedly decide who wins in November, you're not able to control that here, and it shouldn't have a large influence on different actions or behaviors you should have when it comes to your portfolio. The proof is in the pudding here, guys. This is one of my favorite charts over roughly the past 100 years. So including things like Great Depressions, recessions, assassinations, world wars, everything that you can think of over a 100-year period, the data is somewhat clear. We see a steady increase regardless of which color is occupying the White House, red or blue. Now, with that being said, policy does matter. We have periods where we see contractions, certain recessions, or policy maybe didn't pan out as designed. But overall, if you're going to ask me what the next 100 years could look like, I think it would look relatively similar. This is looking at the growth, hypothetical growth of specifically the American markets over roughly the last 100 years again. So what can we control? How much are we saving, spending, those types of things? But more specifically in the investment world, this may be one of the most important concepts I would want to impart on you today. Over a course of about 30 years, an organization called Dalbar tracks both what indices perform. So indices as being just a general benchmark. How well did the American markets do, or how well did the Chinese market do, versus what the average investor performs? What is their actual performance? Over a span of 30 years, we see a difference of really more than 4% difference between what actual markets are performing versus what is the average investor actually taking home. This is significant when we look at the impact that this has on your financial picture, especially thinking in a longer span of time. 4% may not seem like a large chunk. I am here to tell you it is a material chunk that year after year after year, 4% compounded could be the difference of tens, hundreds, maybe even millions of dollars, depending on which amount of money we're looking to start with. So our focus on the TradeWinds side is ensuring you capture as much of the market return. Maybe it isn't invested all into stocks. Maybe that's something you're not comfortable with. But whatever our target is, our job is to capture as much of it as possible and avoid some of the popular biases that keep people out of the markets. If you could take one sentence away from today, after everything that I've droned on and on about for this afternoon, a presidential election is not going to derail your financial plan, but your behaviors certainly can. Let me say that one more time. A presidential election, or some of these sources that we cannot control, is not going to derail your financial plan, but the behavior and the actions you take as a result of that behavior certainly can, and the data is very clear. We want you capturing as much as you can and what the markets are going to provide us, and not being average, the average equity investor. This is a tremendously important topic for you as a human first, but also as an investor second. So we'll continue to see what the output will look like in 2024, but we operate as trusted advisors on your behalf. These are concepts and talking points, themes that can be really hard to discuss with family members, friends, neighbors, those kinds of things. We want to provide you a level of support and a safe space for you to come in and hash it out. Whatever candidate that you may be feeling strongly about, or that uncertainty that a lot of us, myself included, by the way, are feeling about how 2024 is going to pan out. Your feelings are real. What our job really operates as, in a lot of cases, is being a support system for you and empowering you to try to capture your full potential and candidly not letting yourself get in your way of controlling your financial future. So we are always open. Myself, I know some of the dedicated members on the team are always open to ensuring you have an aspect or a group of people to throw ideas off of. Um, and certainly, I would be remiss here if I didn't end with some of the popular sources that I pulled from. So groups like our friends at the IRS, Strategas is a really sharp research institute in DC. They publish a lot of research and information. Fidelity and the Tax Policy Center for some of the more tax-oriented graphics we reviewed today. So um, I hope today was valuable. I'm going to stop sharing. We will bounce back here to us. Thank you so much for joining. If we do have questions, Mike, I'll let you help me manage that. But overall, we are going through a busy election season, right? We are going to continue to be inundated with political ads, um, different people feeling passionately on social media, in the news, and the markets are no different. We're constantly going to see people encouraging you to change your investment philosophy. If Trump were to win, you need to sell out. Biden wins, you need to put all of your money in healthcare. These are things that we hear somewhat frequently just in the news and the talking heads, and I bet you do too. So with that, we're always open for questions and concerns or further continuation of a lot of these topics. Um, but Mike, I am going to turn it over to you here. Let's take a look. Looks like a question from John for GDP to national debt, which candidate is more likely to tackle? It sounds like John is feeling like my gut feeling and really is neither. Do we have thoughts on it? We feel like our debt level is growing too much without spending and tax breaks both underway. John, I would largely agree with you. The truth of the matter is, whether it be a Trump presidency or a Biden presidency, we've seen the debt go up in both cases. So whether or not it's something that tends to pop up, and for better or for worse, we tend to associate Republicans as being more business friendly or small government. We need to shrink our spending, and there may be some elements of truth to that. But we've also saw Donald Trump put quite a bit of dollars behind what deficits and debt looks like. I think that may be really tough for us to determine what that would look like in the future. I think the conventional wisdom is, though, we have a government that is getting larger and larger and larger. If we think about how many social programs between like Social Security, Medicare, the two largest, we think about how much money we spend on defense. Those are some really large chunks of where our tax revenue goes. And having some of the international conflict that we've just recently had this week and later last week, especially, I think we could probably bet on more money going towards defense here in the future as well. The United States spends way more than any country. I think even the next four countries combined is roughly what the United States spends on defense. So we spend quite a bit on those, along with programs like Social Security and Medicare, for example. Let's see, Mike, I'm looking for any other questions here. If anyone has a question or a topic that we can talk through, I will be glad to answer. We'll just wait a second, see if anything pops through. Mike, it looked like that may be it. So let me close here by saying this. Thank you so much for your willingness to attend today. Once again, you've shown us a step to be open-minded, putting yourself in a position to learn more from a source that tried to be as objective and unbiased as possible. So thank you so much for your time here with us. We want to act and continue to act as a support system here for you. So whether it's election focused or how that impacts your personal circumstances, please let us know. That is what our job is, and that's what we're here for. But enjoy the rest of your day and your week, and here's to being on the road to November. So thanks again for your time and for joining. Everyone, take care. Thanks.